So Midas Gold basically has one project in Idaho called the Stibnite Gold Project that we've been working on since 2009. We were founded as a private company, spent 2009 to 11 consolidating a historic mining district in Idaho, and had about 1 million ounces of past production, but suffered from fragmented land ownership. And we completed that consolidation process in 2011. We went IPO'd in July 2011 and have taken the project through initial resource, PEA, PFS. We're now wrapping up feasibility study and are about halfway through our permitting process to build the mine. And still waiting for presentation. Nice. More sparkling water. So, sure. So, thanks. So as I said, we went public in 2011, and we spent about $160 million on the project since then, doing the work that I just mentioned. A significant development recently was we had a $38 million US placement by Barrick Gold into the company. It gave them 19.9% of the currently issued shares. But we do have convertible notes out there, which are well in the money. Like, we're trading at 3 times the conversion price of the notes. We can force conversion of those notes by March 2020, so just under 2 years from now. So if you kind of really look at it on a fully diluted basis in the money, they have about 12.4% of the company. Obviously, a significant endorsement of the project. What is the Barrick strategic interest? It's really in looking at the potential of shipping concentrates from our site to their facilities in Nevada. We're about 300 miles away from Goldstrike, and they have a significant sulfur deficit in Nevada. A lot of the new discoveries they've made over the last number of years, including Gold Rush, are low sulfur feed. And what is sulfur? Well, sulfur is the energy that drives autoclaves. And so low sulfur ore, it means there's not enough temperature there to oxidize the sulfides, so you get low gold recovery. So they're essentially having to supplement with additional energy inputs in order to fully oxidize those sulfides and get the gold out. So what does our site offer is basically a high sulfur feed that can supplement that. So this is our highlights of the market capitalization. As I mentioned on the top left there, those convertible notes are way in the money, so you should really count those as being in the money. So you're really kind of talking 370 million shares out. We're trading just over $1 Canadian per share. Have a solid shareholder base. On the bottom right, you can see essentially the fully diluted number, which would give, as say Barrick about 12.5%, Paulson & Co. have about 25%, and then we have a good sort of combination retail, institutional shareholder base as well. I talked about this Barrick financing, so I'll kind of skip through that. So where are we? We're in central Idaho, basically bang in the middle, not too far from the Thompson Creek mine, which is a useful benchmark because it's basically a very similar scale and type of operation to what we're planning, producing a concentrate on site. We're going to produce a gold con, they were producing a moly con, but it gives us some good benchmarking parameters against it. If this mine was in production, the date of this U.S. government survey of all the different assets in the United States, both mines and development project, this would be between the 4th and 6th largest gold mine in the U.S. It's got the 13th largest resource, it's got the 8th largest reserve, and it would be the 4th highest grade open pit. So it's not just size, it has grade as well. And in fact, Mineral Ridge was a tiny little mine that shut down, and Golden Sunlight is supposed to shut down this year. So we'd essentially be up, second to Cortez as the highest grade open pit and large operation. We do produce about 5% of the cash flow comes from antimony. What is antimony? It's one of those typical Chinese controlled commodities. where they produce about 75% of the world's supply, but they actually have about 90% of the smelting capacity. So they really control this commodity. 5% of cash flow is nice. It's primarily used as a flame retardant, and two of the biggest sectors in the U.S. that use it are the Department of Defense and Department of Energy, because they're two departments that don't want things to burn. And as say, its primary use as a flame retardant. That's led it to being put on a proposed list of critical minerals that's currently being considered by Congress. And essentially, it would de-risk the permitting and regulatory process to encourage domestic production. Whether we benefit from that or not, but it certainly gets the project on radar. What's the value opportunity? It's basically re-rating the project and the company as you move into production. So this is a chart that Hayward put together, and it's basically looking at the sort of intermediate to mid-sized gold producers and looking at the market capitalization of those companies. And given our annual production, we should move across to that circle somewhere in the center of that chart, as we move into a production status. And so that re-rating is obviously the value opportunity as you get into production. There is also additional value opportunity as we update the feasibility study. This is a chart that looks at a PA we did in 2012 and a PFS we did in 2014. And obviously the NPV of the project went down. But the key is on that left-hand side, the two that are highlighted, 70% of that reduction in NPV were things that we can easily control. So the one on the left is that we went to a finer grind in the PFS and the PEA. Unfortunately, we went a bit too far, so it actually led to a negative NPV impact. But we've subsequently done the bankable feasibility metallurgical work, we've announced the results, and we've essentially recovered all of that, and if not more, by the work that we've done to date. The single biggest chunk, which was 60% of the reduction in NPV, was primarily driven by the fact that you can't use inferred resources in a PFS, where you can in a PEA. So there's 1 million ounces less in the PFS than there is in the PEA. What's the solution to that? You go drill, you convert the inferred to indicated, you make them reserves, and you can use them. So we have done a bunch of drilling. We've announced all the results already. We've put out a new resource update, and we've essentially converted a bunch of that NPV into material that will be used in the feasibility study. So we should recover a significant amount of that value as well. As parallel with this, obviously we're continuing to look at the feasibility study and looking at ways to essentially improve the operation overall to reduce CapEx and OpEx, and I think we're having a success in a number of areas that we're going to talk about in the feasibility study. What's unique about this site, though, for U.S. permitting is this is basically a situation where there's been significant historic mining, which has left a substantial legacy of negative impacts. These are some photos from the mine when it was operating. There was a smelter on site, multiple pits, town sites, etc. And when they walked away, they just walked away because in the 1950s there were no reclamation standards, and that you can see on the right-hand side there, that whole valley is underlain by arsenic and antimony-rich tailings, which were unconstrained, they're unlined, so they're leaking into the groundwater and surface water. On the picture in the center there, that's the east fork of the south fork of the Salmon River running right through an open pit and waste dumps, which cut off salmon migration in the 1930s. We're going to bring salmon back up. We're going to pick up all those tailings. They're grade 1.2 grams a ton gold because they are after the antimony, not the gold. We're going to reprocess them and recover that gold out of it. So this is a situation where the economics are positive, but we're also going to clean up the environment so the site will be substantially better post-operation than it is currently. And this being the poster child, which is that pit that cuts right across the river and cuts off salmon migration since 1938. We're going to restore salmon migration and get them upstream. What's that led to is a strong social license, and this really illustrates it, is we have probably a unique in the United States, and to have both houses of the state legislature with both parties co-sponsoring a resolution to the federal government saying we support this project. It had the highest number of co-sponsors of any legislation brought before the legislature in the state's history, and was co-sponsored by both Democratic and Republican leadership. And really that's illustrates the results of a strong social license. So where are we? We're in the midst of permitting. We're about halfway through the process. You can see a breakdown on the bottom line there of the next milestones that are coming through. We aim to be through the permitting process by the end of 2019, start construction in 2020, and be in production for 12 to 15 years, producing 340 to 390,000 ounces a year of gold. So thank you very much. And we're at booth 25 if anybody wants to drop by.